those who are not familiar with the sort of history of Chintai, it originally started out as the effective leasing exchange and resource model that the community built out for EOS during its early phase. That subsequently then got replaced by Dan Larimer's vision of the Rex, which for those who might remember then got subsequently retired again as part of a general overhaul of the resourcing model. But during that early formative period, Chintai was a fairly important part of how we as a community tried to add some efficiency to how businesses operated on top of the EOS blockchain. This is long before DeFi even existed as a phrase. We actually had EOS being a yield-bearing token that was linked to usage on the network. So really quite healthy tokenomics looking back. It was very much usage-driven. And it worked extremely well to the point that all of the online casinos, for example, that existed in that point, because that was a really big part of the crypto ecosystem, boomed and operated extremely well fully on chain on EOS during that period. Really from the roots of that early infrastructure that got built out, an on-chain order management system that could handle relatively high volumes, we took a step back after we issued the Chintai checks token to start building out something that was going to be a lot more versatile and comprehensive. The early vision of that was, let's build out infrastructure that other groups on EOS and beyond can use to do different forms of issuance and markets, because we could see that shared need across lots of different projects we were talking to. And then really pretty quickly, as the SEC started coming down and arresting the first batch of people in sort of 2018-19, it was quite clear that we couldn't just ignore reg compliance. And that changed our focus towards looking at, all right, if we're going to have to do everything here and manage that side of the equation for users too, how do we do this? And that led to us really having to think about financial licensing, which is not a small thing to do at all. It's an extremely expensive, big undertaking, and you have to operate companies to a very different standard once they're financially licensed. But nonetheless, we thought, okay, this is going to be part of the path we're going to have to take. Did raise $7.5 million USD in the seed round and went ahead and applied for licensing in Singapore. During that period, expanded out the dev team, primarily Europe-based, and then attained the 2 licenses at the back end of last year. And in parallel with that, I've been building up the initial client pipeline. And really basically the network is built out now, and we're just working with the clients ready to actually kick off first issuances in secondary markets, which is when things really get interesting. Entire network itself is effectively a permissioned instance of Antelope at this stage. We're not interested in pushing to decentralize it yet. The key word there is yet, because long term, I don't see the point in doing this without decentralizing the network, but that has to be done hand in hand with the regulators and the clients to make sure everybody's comfortable with this standard it's operating to, and so on and so forth. But over time, that will be part of it. And then another big part of this is, while it's now currently going to be operating initially as a walled rose garden of regulatory compliance, it would be a waste to not look at the liquidity and other benefits that you can see in the DeFi system, all the chains, including EOS, and think about how they can actually provide useful services to this type of real world asset tokenization.